Welcome to Good Money Guide. Today we're going to be talking about UK Treasury Bills with Adam Dodds, the CEO of Freetrade. So, Adam, thank you very much for joining us and giving us a bit more information about your new product.
Pleasure to be here. And I was just thinking about last time, or actually the first time we met in person. I've got it right here. The Good Money Guide. Where is it? There it is.
There we go. The Good Money Guide Award. Do you know what? I was just looking through that because obviously before these things you have to do a bit of research, and I was looking through your About Us story, and I was very pleased to see our award up there. Was that so you've won two, haven't you? You've got 2019. I think we had it in the Lamb in Leadenhall Market. You won People's Choice because you've obviously got a massive social following, and then 2021 you won Best Commission-Free Stockbroker in the awards.
Yeah, it sounds like unfair. We probably were the only one in the category for the second one. Yeah, that's the 2019 version. So yeah, we've been doing it in a while. 2019 was like when we first launched to the world on iOS and Android back then. So I think we had a 50,000 person wait list at the time. So it's kind of fun to reminisce about that. But
yeah, and a lot's changed since, actually. Like you said, you were probably one of the only players back then, but now the market is saturated with low cost or free, I'm putting inverted commas up, stockbrokers. But we'll go into that a little bit later. This is the second interview we've done with you as well. I was just reading through the one we did back in 2018. That was just after you launched. So it'll be interesting to see how.
Yeah, that would have been still in waitlist mode, I think, too, in 2018.
Yeah.
But yeah, super cool. Okay.
So, but today we're going to talk about UK Treasury Bills, how people can invest in them, and Freetrade's offering around that. So, shall we just kick off with you telling us a little bit about what UK Treasury Bills are, particularly from the point of retail investors? Because obviously, UK Treasury Bills, private investors have always been able to invest in them, but the caveat being you need £500,000 to do it. And this has always been one of the problems with really attractive investments. Usually they've been just for, very wealthy people or institutions, but you're offering that up. So let's do the sort of elevator pitch. What is a UK Treasury bill for people that don't know?
Well, the simple answer is it's an IOU from the government on the shortest terms available. So I think most people will have heard of the Bank of England rate, right? Like this is the thing that you always hear in the news. I think it's 5.25% right now. What's the Bank of England governor going to do? Raise rates, drop rates, or whatever. But that rate's really only available to banks, right? So you need to be able to, you need to have an account at the Bank of England, and your typical man on the street, doesn't have that. So how do you get access to that risk-free rate? Is kind of that's nothing in life is risk-free, but that's the closest thing backed by the government. And Treasury bills is the next, I suppose, maturity, or length of investment. So it's not overnight, but it's a 28-day, 1 month IOU from the government. So you're able to achieve the closest yield or rate of return directly from the government that you read in the news.
And I think that's a really important thing for investors as well. We just, before this, we were just chatting about how well the market's done. And it's done well, even though investors can get a great rate of return on their cash in a cash ISA or a savings account. But often the disadvantage with those is your money's locked up for a long time. And one of the key things with T-bills, of course, is that it's 1 month. So you put your money in, you earn your interest, and then you get your money back after a month. It's interesting, actually.
If you think about like the mechanic, so a bank account, right? So if you're putting money in a bank, what is a bank doing? What they're putting that cash mostly with the Bank of England, getting that rate, and then giving you a rate that's below that, right? There's some spread, or so. What's the best high street rate, right? You're going to get 4 point something percent, maybe. Um, you might have some promotional rates, but I mean like a real rate
Yeah.
on demand, or even a 1 month rate, right? What we're doing with T-bills is cutting out that kind of middleman. You can just go direct. You're literally like, they're borrowing, the government is borrowing short term directly from you, and the risk around I guess the return of your capital is directly with the government too, right? So I don't want to say that the banking system is risky or anything like that, but you look on the league tables, I guess you could say, around what the best interest rates are at any given time. Usually, when I look, at least, it's some bank or building society or something I've never even heard of. Generally, and that's not quite Lloyd's or NatWest, that is like backed by the UK government after the great financial crisis. So you do have a different risk profile, I would say.
Yeah.
And what's cooler than going direct? That's my view, at least. And I think you were asking me before. It's like, what why wasn't this available before, or is it available before? As far as I know, this is the only place in the world where a regular investor, retail investor, could go and buy UK Treasury bills. Treasury bills is like a huge thing in, say, the US, but for kind of some peculiarities of the market, I suppose, in the UK, it's just not been available to people before. So, kind of going back to Freetrade, we were the first ones to offer zero commission investing in the UK. You mentioned, there's a few other places to do that now. We're innovating on the Treasury bill side, and we'll be offering more opportunities to on the government bond side. But we're starting with the shortest maturity, the lowest risk version to start, and that's the 28-day, 1 month T-bill.
So it's essentially, if a punter wants to come, or an investor rather wants to come onto Freetrade, buy these UK Treasury bills. I actually had a play about this morning. I bought some, or rather, I put myself into the auction on Friday for some on your app. It's very simple, but they differ slightly from usual bonds. I mean, I love bonds. We've covered the bond market for years. I think they're a great asset class for both. Growth, if you buy an undervalued one with a great yield, or you just want something more secure if you want to buy a gilt or a government backed bond, because obviously they are guaranteed by the UK government, and if the UK government starts defaulting on its debt, we've all got bigger problems than where our investments are going to go. But of course, the traditional thing with bonds is you get a coupon, don't you? So you either buy them at £1 when they come to market, and that price of that bond will either fluctuate up or down if you're looking at a corporate bond basis, how well the company's doing, or to put it another way, how likely it is that bond is going to be repaid. And generally, the danger with bonds is the closer you get to maturity, so the closer you get to a company having to pay it back, the riskier they become. But UK Treasury bills work a bit differently than that. You don't get paid a coupon, do you?
That's right. And I would even say it's even more complicated with the gilts, right? Just to be clear, Treasury bills, right? Those are maturities on issuance of less than 1 year, and then gilts are the gilt edged securities, the government UK government bonds. Those are over 1 year, and the difference, as you said, where do you get the returns from? Well, when you issue the new gilts, there's a coupon payment, so that's an interest payment, right? There obviously is still also going to be a change in value, so there is a return based on that as well. So that's kind of, you have two aspects of the return on a gilt. Treasury bills are much simpler. They're just issued at a discount to face value, to par value, right? So if your expectation is, the government's going to give you £1,000 in 28 days. What's the price that you're going to pay today, right, to get £1,000 in 28 days? And the difference between that is your return, right? And then you take that return, you do some division and you multiply it by 12, and then you get an annualized number. So that's the number that we kind of lead with. There's a reason why you have an annualized number. Everybody's kind of familiar with interest rates, right? Comparability. So we're talking about the universe of different government debts. So they have different maturities. It might be 1 year, it might be 6 months, it might be 30 years. The common denominator there is the annualized return.
Is the rate.
Yeah, exactly. So that's what we lead with. I think last week it was 5.15, so not quite the overnight rate that is published 5.25 at the Bank of England. If you go actually longer than that, the rate goes down because the expectation in the market right now is that interest rates are going to come down over the relatively short term. So someone that, say, wants a 6-month T-bill, which we're going to offer pretty soon, will actually be taking a lower rate than a 28-day, which is also lower than the overnight rate, just because that's what interest rate expectations are, so-called inverted yield curve.
So just to clarify on that, if someone comes onto Freetrade and gets in the auction to buy a 28-day 5% T-bill, they're not getting 5% back in 28 days. I think that's an important. That's an important point. That would be the best bond ever. But it's 5% split over a year, so 5%.
Exactly. So what you would need to do is you just roll that over. But also that rate is getting repriced on a monthly basis, right? So if interest rates rise, that yield will go up. If interest rates go down, that yield will kind of go down. Otherwise, you need to lock in a longer dated government security.
Okay. And what about from a customer's point of view? If someone invests £1,000 in these treasury bills, what happens at the end when they mature? Do they get the money back as cash? Can they reinvest it into the same bond again, or can they choose something? Can they choose something different?
So the default in the product, right, is to reinvest. So maybe even we take one step back and just talk about the mechanics of how treasury bills are issued, because what we're talking about is primary issuance. This is not traded on the secondary market. This is being issued by the Debt Management Office of the UK, which is I hope I use the right word, but a department of the Treasury, and that happens every Friday. If there's a holiday, it happens on Thursday, so it's really the last business day of the week. And what happens is it's called a tender. It's kind of like an auction, but almost like a silent auction, I guess you could say. And what you do is market participants, Freetrade's one of them, submit bids for a piece of the weekly tender. And last time I checked, there were roughly 3 billion worth of bids. These are coming from all sorts of market participants, as you can imagine, banks, pension funds, whatever. And they specify what rate they're willing to pay the government. And the government, what they'll do, or Debt Management Office, I should say, what they'll do is they'll accept the best bids up until the point at which the amount that they want to issue. So 3 billion in bids, maybe 1 billion in 28-day T-bills. They're actually going to issue. So they take that top third or whatever of the bid. So we just try to make sure that we're in that top third. We're giving a competitive bid, but you never actually know what the yield is going to be until that actually happens every Friday.
So a couple of questions then. How did you guys get access to this? Do you just put a bulk order in and say, listen, you know, half a million usual investment? Do you guys go, look, we're pretty sure we're going to be able to buy 500,000 of this every year? Sorry, every tender. And then second thing, what happens if you price it wrong? What happens if you price your bid too low? Does that mean that customers don't get them, or do you have a system
Yeah,
around that?
that's a really important point, right? So we can't guarantee the rate in advance. You know what it was last week. You know what the secondary bonds are trading at. So if you think of a 30-year bond that only has 28 days until maturity, that's roughly the same risk profile, right? So you can get a sense, but you never actually know. The biggest risk I would say honestly is in the is if we weren't going to fill the order, if we missed or something like that. So that is a potential risk. The other one is if we put in a bid that's maybe, if we put in 1%, 100% chance that the government's going to accept that one, right? So there's a risk that we're maybe not optimizing for the best possible rate. So there are you can see this on the Debt Management Office website every week. They publish this, and some market participants will get 5.18 and some will get 5.17. It just depends on what they're bidding. So we aim to make sure that we're getting a good price, but we're also getting an extremely high certainty that we're going to be included in the tender for that week. We do an order, you put in an order anytime during the week, we'll just queue that up. And then to answer your kind of question before, is what we do is we aggregate all of our customer orders and we put that in once for the tender on Friday, and then distribute that amongst our customers. So together, we have far in excess of the 500,000 minimum or what have you, right?
And what happens if you don't? Do you have some nice institutional customers that you can just ask to fill, for want of a better phrase, a liquidity gap? If you only get 400,000 in orders, I mean, how's it looking at the moment? What's demand? What have been the tenders so far?
In terms of rates or
Yeah, no. I mean, how much have free trade customers put into the pot for treasury bills so far? Is it way above 500,000 or?
Well, I think we just launched this thing in what was it? I guess mid-December, and right now it's between. I'm trying to remember. I think it's between 4 and 5 million that is queued up for this week. So you can kind of get an idea. That's grown quite quickly. The first kind of tenders, we actually had to use some of our firm cash because it's a good return. So we have cash on the balance sheet to fill the 500K. So things have moved pretty quickly.
And that's a good point, actually. Do you fractionalize the bills in the same way you fractionalize shares? So is it
So
physical ownership, or
not to get
we're
yeah.
digging a bit deeper, but
No, I'm happy to share that. So conceptually and mechanically, yes, it's essentially the same thing where the assets are held by the nominee, the market, and the custodian, and well, actually, we're the custodian, the securities depository. Everyone sees Freetrade Nominees Limited. That's where we hold all our client assets, and then we use our books and records and whatnot to appropriately allocate that. The big difference here is the UK Treasury market. That's how it works. So it's not fractionalizing. It's divisible by up to 1 pence. So you can divide the Treasury bill down without calling it a fraction of a Treasury bill. You can have a 10p Treasury bill. But so. Yeah, hopefully that was explanatory. I don't know.
Yeah, no, that makes perfect sense. And then I suppose the thing is, once you get in motion, or once you've got four consecutive sets of 28-day orders
Yeah.
and the reinvestments keep on coming, then getting up to that 500,000 allocation shouldn't be a problem at all. Okay, so we've done the positives. Let's it's a great short-term government-backed interest rate investment. What about the risks? I mean, obviously we touched briefly on them before, and originally these things were, put into place for when the government needed to borrow cash quickly. Um, they started off, didn't they? So they could buy, weapons for wars. And the way the world is going, they might be in more demand. But let's just go through the risks. As you see it to a free trade customer, if they were putting money into this asset class, what would you say are the top two, three risks to them as an investment asset class?
So the headline risk on any kind of debt security, right, is default. I don't think that's like really a risk. I don't want to give investment advice here, but we're talking about the shortest dated securities issued by the UK government, backed by the full faith of the UK government. I believe, I forget what year in the 1800s they first started issuing this stuff. It's never been defaulted on through two world wars, whatever. You know what I mean? So this is the closest. Like if you studied an economics textbook or whatever, this is the risk free rate, right? So I don't think that's something that most people should worry about. So then the question is, what are the kind of the real risks here? And I think that's what we were talking about earlier, where maybe we don't get the fill in the auction. Maybe our bid is a little bit too high an interest rate or something like that. That's a very conceivable possibility. In that case, you just still be sitting in cash. But to your question on what would we do in that scenario, yeah, there's the T-bills market, like it's a very liquid market. We could go and buy some secondary for our customers, and that would be potentially a slightly lower
And
rate.
presumably, if you miss the tender and it stays in cash, do you guys pay interest on cash on account at the
We
moment?
do. We do.
So they still get a bit of interest, but just not as good as the
Yeah,
T-bill.
it depends on what I guess tier you're on or plan you're on at Free Trade, because we have some interesting new cash interest rates that are coming out very soon. I don't know if it's going to be tomorrow, but yeah. So there is interest on cash from Free Trade as well.
Okay, and it's a very difficult question to ask anyone, especially the owner of a business. But it's an important question. Are these investments protected in the same way as shares? So obviously shares are held in a nominee account. If God forbid anything happened to your brokerage, and it can happen to anyone. I worked for the biggest broker in the world,
Yeah.
FTSE 100 listed. No one thought it was going to go bust, and then it did. So there is always that risk. If customers hold these on account, are they protected in the same way as stocks and shares?
Yes. Simple answer is yes. So these are government securities. Ultimately, where are they held? They're held at CREST, which is the Central Securities Depository of the UK, and they're held by a nominee, Free Trade Nominees Limited. It's subject to all of the same controls and compliance procedures under the client asset rules in the UK. CAS is what they're called. So long answer, yes, it is, and you're holding the direct security. So you're not. So going back to what we were talking about, like kind of the bank account analogy, right? So like bank accounts, you are counting on that bank to be there, right? Fractional reserve banking. Maybe we don't want to get into that, but that's quite a bit different than holding directly the government security, and that's what you're doing at Freetrade. You're getting the rate directly as well. So the published rate is the rate. We're not taking a spread or anything like that. And for now, at least, it's free. We're going to charge a small custody fee going forward, starting from the new tax year.
Okay. Oh, that was actually, one of my next questions is that, nothing is free. And so it's free at the moment. And then at some point in the future, you'll charge you'll charge custody. Can you hold these in ISAs and SIPs as well?
My understanding right now is absolutely you can. The thing is, we haven't made them available in SIPs or ISAs at the moment, but that's coming very soon.
Okay. Actually, let's talk about ISAs. I mean, I think we're pretty much done there for Treasury bills. I think we've got a good overview of what they are, how people can buy them, and the risks and so on. But we touched nicely on ISAs. We've been talking about fractionalized investments. You've been quite vocal actually about fractionalized shares in ISA accounts. This was a big thing with Jeremy Hunt, and I was actually surprised that he didn't mention anything in the budget. What do you think is going to happen there for smaller investors?
We're watching it very closely, right? So just for a little bit of the background, right? We've offered fractions in ISAs, fractional shares, US shares for some years now. What happened in the autumn, though, was HMRC came out and said, officially, publicly, whatever you want to call it, that their view was that fractional shares weren't ISA eligible. We obviously disagree. And if you've followed maybe my social media, you might see some other opinions as well from experts that also disagree with HMRC on that.
Yeah.
And also, then the government did come out in the autumn statement and clearly state that they were going to change or modernize, whatever word you want to use, the legislation to be clear that fractional shares are eligible. Because the crux of it, I guess, is if you really get into the nitty gritty, it's just fractional shares are not mentioned because the legislation was drafted before fractional shares were really a thing in the UK. So there's some interpretation whether is 1.5 shares a share? Are they shares, or is two shares a share?
I think as well. There's a massive difference in the way people invest. It doesn't just affect small customers; it can affect big customers as well. Because if you want to buy 10 grand's worth of Tesla, I think people are very sort of, they want immediacy nowadays, and I think a lot of the platforms have recognised this. You guys as well, even the bigger ones, are saying, look, if you want to buy $10,000 worth of Tesla, you can buy $10,000 worth of Tesla. You don't have to round up or round down. We'll just put 10,000 in, and then you can decide. So, and that even though they could afford to buy a certain amount of full shares, they're buying fractional shares for ease and simplicity. So I think the government does have to take into account the behaviour of investors as well as just catering to the small or big ones.
It doesn't make a whole lot of sense why anyone would there's no benefit here to or even to whatever banning fractional shares or whatever. It's only a benefit for customers, to get access to this stuff. And if you look at it critically, why did this interpretation come around? I think it's because of some players in the market were muddying the waters around what a fractional share is. I don't want to, call out individual firms or anything, but I certainly seen in Europe some players disguising CFDs, contracts for differences, or other derivatives as fractional shares when in fact that's not what they are. So I think that's caused some confusion in the market, and also caused regulators to kind of come in and kind of clarify that, certainly in Europe. So we'll see where we land, but that the way that we do fractional shares, it's absolutely not, a derivative in any form or what have you.
Okay. That's great. And I think it's particularly important for newer investors, because newer investors, when you first step into it, you just look at it as you're buying X, Y, and Z. You don't quite appreciate how you're buying it. And then the more mature and the more sophisticated you get as an investor, then you just move from one platform to another if it is doing things not quite the right way. I think is good.
Yes.
So let's
like literally next week, though, we're shipping a product improvement or feature where you're going to be able to specify on U.S. shares whether you want to buy a whole share or a fractional share, so that choice will be available to our customers regardless of what.
So you can still buy. So you can say, I'd like to buy 10 grams worth of Tesla, but I would like to buy, round it down, so I own whole shares rather than fractions.
You can do that, but you can also buy fraction as well in your normal account as well.
Great.
So you can choose basically.
Great. All right. Brilliant. Let's finish up with some quick fire questions. Are you happy to do some quick fire questions just about you and your investments and how you like to do things? Again, none of this is investment advice. It's none of us know anybody's personal circumstances. It's just a bit of info about you and how you do things as a head of a brokerage.
Sure.
So happy? So favorite investment so far that you've made?
Gold.
Worst investment?
Worst investment, a Russian gold miner that went under sanctions, and I can't sell.
Do you know what? It's interesting. I was talking to a fund manager, and they were saying that one of their worst investments was the Russian gold mine. And in fact, one of my worst investments has been a Russian gold mine as well. But that was for a different reason. I just timed the market poorly there. Okay, crypto or stocks?
Stocks. I don't know any crypto.
Okay, US or UK markets?
U.S. markets. I'm trying to think of not too much UK stuff in my portfolio, to be honest.
Okay, UK bond trackers, UK index trackers.
I don't have any UK index trackers, but I do have quite a bit in the Sonia overnight ETF right now.
Okay, and just two fun ones to finish off. What's your favorite movie about finance in the stock market?
Probably Wall Street.
Yeah, love that. And last one, book recommendations as well. If you were to say to all of your customers, look, we've got loads of educational information on how to invest, but if you want something to read that really digs deep into the philosophy of investing and can make you a better investor, what would you recommend?
Graham and Dodd, maybe, or if you really want to nerd out, pick up some of the source material, I suppose, and get deep into it, whether that's the CFA, maybe the CFA Lite is the investment management certificate, IMC. We get new marketing staff at Freetrade. That's what they pick up, so we get our staff to really understand the markets from like first principles and whatnot, rather than I'm not a rich dad poor dad type of guy. But if you want a book recommendation, the last one I just read was the biography of Elon Musk by Walter Isaacson. That one, super inspiring read for anybody. Like maybe it's not necessarily an investment type book, but kind of can inspire for what companies can do, what companies can actually achieve for the world. Like I'm talking to you right now on a Starlink connection. It's incredible what that man's been able to do.
And actually, how many things he's involved with? It's incredible, isn't it? You look at his Twitter; he comes across as a complete maniac.
I would love to buy some SpaceX and Starlink and even Neuralink. So, but it really does inspire you about what's possible in the future, I think. And
Yeah. It's interesting, actually. What about do you buy investment trusts on free trade? There's bound. I wonder if
yeah,
there's any investment trusts, like the space exploration investment trusts that you can
yeah,
dip
yeah, yeah.
into.
You're right. You're right. There are a few of these fund ETFs and investment trusts out there that are able to invest in private companies, but then you can get exposure to it through the app. So yeah,
Yeah, as
absolutely.
long as they don't go off piste and do a
Yeah,
Woodford.
yeah. That's the risk. Oh, that
Okay.
is the risk.
And
Of companies.
one last question before you go. If there's
Hmm.
one bit of advice you could give to investors personally, not advice, not advice, obviously it's guidance. If there's one bit of guidance you could give to investors to help them make more of their money, what would it be?
I would say just keep going, keep investing. Don't try and time the market necessarily, right? Just keep on putting it in there. I think that advice would have been quite useful in 2023, right? So uh, that's the best thing you can just do. Just keep on adding and accumulating over time. Uh, the average long term stock market returns, right? What can you expect? It's always going to be more than what you can get in the bank. And I'm not saying you want to put your everything that you have into the stock market, but just chip away at it every month, and I think you'll be better off than you would have been otherwise.
Well, excellent, Adam. Thank you very much for joining us and telling us a bit more about free trade. I'm sure we'll catch up in the future. Hopefully, we'll see you at our awards this year, and we'll talk to you soon.
Okay, thanks a lot, Richard. Good to connect again.